I have a PhD in finance and investment from the University of Warwick in the UK and an MBA in finance from the University of Nottingham. I would like to share with you a secret. When I did my BA, the only subject that I ever failed in my life was statistics. I couldn't understand why me fail statistics. By the way, I was a champion of chess in my country. So I cannot fail statistics. But that led me later on to study why people fail and why students don't understand and why teachers don't know how to teach. This is a project. I spent more than 15 years of my life trying to find answers for this. ABC is a project. This project is to demystify financial concepts, accounting concepts, statistics, economics, and many other subjects, quantitative subjects. I hope you enjoy it. This subject is not only good for BA students, it is good for BA students, MBA students, managers, entrepreneurs, anybody who would like to understand accounting and finance. You will use it, you will benefit from it, and then later on when you go and study from any book or attend any lecture, you will find that these concepts become very easy for you. You will find them easier than you expect. I hope you enjoy it. I want your feedback. Your criticism is very important to us. We will take it and we will fine-tune the concepts for the future. I wish you all the best and stay in touch. That's from me, Dr. Man Al-Katamin.
Ted is the manager of Smart Fashions, who are into the business of making and selling garments. He takes a showroom on rent for the business and moves in. First, he buys furniture, and next he acquires the stock. Now that the showroom is fully stocked and nicely decorated, he is all set for business. The shoppers keep pouring in and sales are up. Ted is really happy counting the money. With the sales being up, Ted feels the need for a company car to help the business, so he buys one. It is 3 months from the time the business started. Ted needs to know where the business stands, and he finds all his answers in the balance sheet. Ted will share with you the balance sheet of Smart Fashions so that the concept becomes clear to you. Assets, liabilities, and capital are the 3 components of the balance sheet. The possessions of the firm which result in future economic benefit are assets. For example, the machines, furniture, textiles, car, cash, and fixed deposits possessed by Smart Fashions are all assets. The firm has full rights over receivables and prepaid expenses, which result in future economic benefits, and therefore these are also treated as assets. Any fund put into the business by the owners is capital. The funds provided by outside agencies, such as a bank, are liabilities for the business. Goods received by the business for which the firm is liable to pay is also termed liabilities. The unique feature of the balance sheet is that at any given point in time, all business assets are equal to business liabilities plus capital. To understand how a balance sheet is prepared, let's look at 12 business transactions of Smart Fashions over one financial quarter. On 2nd January, Ted receives €25,000 from his father Ben to start Smart Fashions. This amount introduces capital into the business, which increases the liabilities. The amount is then deposited in a bank, which increases the assets. Both sides of the balance sheet add up to the same total of €25,000. On 5th January, Smart Fashions pays €20,000 as a rental deposit for the shop. A new type of asset, rental deposit, appears in the accounts. This increases the total assets. However, the reduction in the bank balance decreases the total assets. Again, both sides of the balance sheet total €25,000.